Good evening, everybody. Jeff, sorry that we're not on time. Sometimes there's technical problems that we have to take care of to get everything running. So I apologize that we weren't right on time. Hopefully you will get a lot more information and to make it worthwhile to be here tonight. Whoops, I still didn't do this right. Gotta give. All right. Um, so anyway, sorry we're a little bit late. We've been having technical problems with Omnovia, which is not unusual. So what we're going to do tonight is that we've got the great pleasure of having Dan Cook with the NADX or NADEX exchange, the binary options exchange, with us tonight. So we met not too long ago at the Chicago Board of Options Exchange a presentation out there, and just kind of figured we've got a very strong combination for people that want to trade on a higher probability basis using candlestick signals. So what I'm going to do is go through our normal analysis, which is finding the effective breakout setups. But the advantage we have, whoops, let me make sure. I guess, okay, you got everything all set up, Rick. All right. What we're going to try to be demonstrating is that because of candlestick analysis, we have a much better grasp on timing and targets. We have patterns that we can recognize: the fry pan bottoms, the dumpling tops, cradle, J-hook, scoop, belt hold, and the gaps. So with that, we're able to fine tune whatever timing or whatever trading you want to do, whether it's swing trading, or you can even fine tune your day trading. And the reason for that is there's three elements in candlestick analysis that puts us at a huge advantage over other technical training or trading strategies. One, we've got a high probability of identifying the direction of a price move. It is on and off with no image. Oh, Ben, if you go to the top of your charts, make sure that you're clicked on screen sharing versus slides. And Lauren, oh boy. Oh, darn, and I don't know where the little icon is for somebody to switch on their sound. Rick, you know? Okay. Okay. So, anyways, what the elements that I discovered that dramatically improve my returns is one, because of the Japanese rice traders identifying reversal signals, and that's the whole basis of candlestick analysis, is seeing what was going on in investor sentiment. And two, knowing where the breakout levels are for the timeliness of a move, and also adding a few of the simple indicators together, like stochastics and using the T-line and targeting the next obvious targets that everybody else is looking at, we can kind of calculate what the magnitude of the move will be. And that's what we're going to be going into when I get finished tonight, is Dan is going to come in and show how to use this information to dramatically improve or give you a whole new set of trading perspectives using binary options. So this is the thing that's always helped me, which is the exact timing for a trade. Because we've got the elements that dramatically help our analysis. Number one, we can put all the stars in alignment. We can analyze very easily what is the direction of the overall market. We can add credibility to that direction based upon what are the conditions of the stochastics. Are there obvious support and resistance levels that we can utilize, identifying what type of signals or patterns are occurring at those support and resistance levels, and what type of signals are we identifying right before a breakout situation. And then finally, all that added together allows you to utilize the patterns that develop, telling us which way a market is likely to move. So let's take a look at the Dow. Now, going through today's analysis, look what happened yesterday. They gapped down and took the Dow right back to the 50-day moving average. All right, we can pretty much analyze what's going to happen based upon that bearish kicker signal, except for the fact that today they gapped it right back up again and went positive. And what did that tell us? That told us that the fear factor that was created by a bearish signal did not confirm, and not only did not confirm, but confirmed that the bullish trend that had already started was still in progress. So this allowed us yesterday to take off some positions that might be looking a little bit iffy. And now we know that we're back in a bullish trend. We're still in an uptrend. And what makes that a very high probability analysis? Because our stochastics are still heading up. We're still trading above the T line. And then today we had kind of a kicker signal back to the upside. Now, if you break down what is built up in each individual signal, it just kind of helps you analyze with common sense what's going on. The fact that they gapped down yesterday, that was a very bearish signal. That told us that we've got the possibility that they could be consolidating in here, at least testing the T line and or the 50. But the fact that they gapped up again today told us, wait a minute, they had some profit taking. Now they're gapping it right back up again. Who's in charge of this trend? It is the bulls still in control. And why can we assess that the bulls are in control? Bullish kicker signal above the T line, stochastics heading up. Kim, the chart service I'm using for these is called CQG. Becky or Rick, if somebody could help Marshall, apparently having problems with sound also. I don't recommend it. This is kind of the grandfather of charting services. Okay, thanks, Marshall. Glad to have you back where you can hear again. I think I have to pay like $1,400 a month. Now, you're getting this same type of chart service, clarity now on Metastock. You can develop it on some of your own trading softwares like Thinkorswim. So charting has become a lot more sophisticated. The only reason I keep using this is I can trade everything off of here, whether it's currencies, futures, stocks, all from one chart. Plus, it's very fast as far as moving from one chart to the next, especially when we do sessions like we do live on Monday nights and Thursday nights. You can move from one chart to the next a lot faster than some of them. But here's what our analysis should be. We could see that there was a trend channel developing. And this is where I always say observe the obvious. We're in the oversold area, and we started seeing piercing signals, bullish engulfing signals, and they brought it back up above the T line. The fact that we were in an oversold condition and we could see buying going on, telling us that probably the 200-day moving average was a target that everybody's using to make their decisions of either buying or selling, we as candlestick investors can see a lot more clearly what's happening at those levels. Now, fortunately, candlestick analysis or candlestick signals are based upon the cumulative knowledge of everybody buying and selling during a specific time frame. We're looking at a daily chart. Candlestick signals work just as effectively on a weekly chart, monthly chart, 1 minute chart, 3 minute chart, 10-minute chart, whatever you're trading. If you go back to the simple definition of a candlestick signal, which is the cumulative knowledge of everybody buying and selling during a specific time frame. My stochastics are 1233. When I started using candlesticks or studying candlesticks 40 some odd years ago now, I hate to even think of that, they were using 1455, but I'm a swing trader and a day trader, and 1233 works a lot better for me. That's nothing set in stone. If you want to tweak around stochastics, all I did was one night, many years ago, I sat and said, all right, where are my signals that are telling me that we're in the oversold condition at the bottom or in the overbought condition at the top? And 1233 seemed to fit that that level pretty good. What are your moving averages and SRI set to? I don't use moving average. This is stochastics, 1233. The moving averages we have on here is the 200 simple moving average. That's the red one. The blue one is the 50-day simple moving average. And then I've also got the 34 exponential moving average. Now, the reason we have the 50 and the 200 is because every major money manager around the world uses those moving averages to make their decisions about their portfolio. We're not trying to use those as our indicators. All we're using them is we know that everybody else uses them. We just want to identify what type of signals or patterns are occurring at those levels. Same analysis with any other technique that you know people are using, whether it's Fibonacci retracement numbers or a trend line, anything that we can identify that a lot of other investors use. The advantage we have with candlestick signals is we can see exactly what the investor sentiment is at those levels. The 34 works reasonably well, and it works better on the futures trading. But here's the important one. This black line is what we call the T line. It's the 8 exponential moving average. The reason we call it the T line is the trigger line, which tells us if we see candlestick buy signals and a close above the T line, we know the uptrend will stay in progress until we see a candlestick sell signal and a close below the T line. Yes, Kim, that is the reason for that that analysis. Is we want to use those moving averages. Not that we're using them, we're just identifying what type of signals or patterns occur at levels that everybody else is watching. And then the important one right now is the T line. So as you can see right here, when they started hitting the 50, we started seeing buying, the green candles. When it came back down and hit the 200, we started seeing buying, again, coinciding with stochastics. So remember yesterday, or 2 days ago, we had this hard selling going on. Was this telling us the market was ready to turn big? Well, we could see what was happening in what was happening with the Amazon. Yesterday, they were still buying Amazon. So simple logic says if they're still buying some of the biggies, That means they're not bailing out of this market just yet. But the opportunity we have with candlestick analysis is we can easily see which stocks or sectors are, let's phrase it the other way. We can see which sectors and then which stocks in those sectors are acting the best. There's a green line here. This is the 3T line. Now the caveat to we can buy when we see a buy signal to close above the T line until we see a sell signal to close back below the T line. There's a caveat to that. And that is the further away we move from the T line, in this case it wasn't really, but if you started moving too far away from the T line, the probabilities are pretty strong that it's going to come back and test the T line. What do you see with the inverted hammer? What do you see? We don't want to get into, let's see, did you see an inverted hammer here? Yeah, there's kind of an inverted hammer, but it was mostly the piercing signal and the bullish engulfing. So if we can see, usually we want to see an inverted hammer at the bottom of a trend. So that's part of it, but that was more telling us that when they confirmed the piercing signal, what didn't they do? They didn't close above the T line. That told us there was still some more consolidation going on down here. It wasn't until this day when they actually did close above the T line that told us the probabilities were pretty strong. We were heading in an uptrend. So the analysis right here is very simple. If there's a trend channel through the bottoms and the tops, where do you think this next price move will go? Probably coming back up to test the top of this trend channel. So what we've got very clearly is graphically, we can see when there was a change of investor sentiment and a turn in this market. Now, yesterday, the reason we didn't think, it was time to bail out 100% with this bearish kicker signal, once again, we saw some of the biggies still being bought, telling us they weren't bailing out of this market in general. They were just doing some profit taking. Yesterday, the Nasdaq opened lower and traded higher. What's that tell you immediately? It tells you they aren't selling it off. They're just opening it lower and they're trading lower on the day. And then today, another strong move. And it looks like it closed at an all-time high, if I'm correct. So what's our next likely target? Coming back up into the trend channel. So what we're going to kind of stress with at the end, how to use the binary option system that Dan's going to show us, is because we can identify no matter what time frame you're trading. This is the S&P 500. Again, same scenario. Started seeing buy signals down here, close above the T line, almost to the breakout level. But let's say you're a day trader. Candlestick signals are just as effective. That if you think we're in an uptrend or this day is going to be an uptrending day, now you flip to your 10-minute chart. And if you want to day trade, again, there's our little J-hook pattern. You can be buying right here, knowing that you can stay long until it closes back below the T line. So depending on how active you are, what is the trend you just mentioned? What is the trend? The T line? That's the trend, Marie? Yeah, the T line is the 8 exponential moving average. Now, a lot of people say, well, why not the 9 simple or the 10 exponential? Because through the years, we've discovered the 8 works extremely well. But the nice thing about candlestick analysis is there is one basic function that creates the signals and patterns, and that's human nature. Human nature has not changed for the last 400 years since the Japanese rice traders started identifying what happens in human nature, and it's not going to change for the next 400 years. So basically all we're doing, you don't have to be a high-tech or technical analyst or sophisticated analyst. All you have to do is be able to identify what normally happens in human nature, the different patterns. So if we're day trading or whatever time frame we want to trade off of, if we can kind of conclude, all right, we're still in an uptrend, I'm going to look at my 10-minute chart. Popped up, pulled back. Now I've got a J-hook pattern. Right here is an extremely high probability trade setup that we're going to move higher. If I want to trade a little bit more active, I can flip to, oh, what happened? I got them in the wrong position. You can flip to your 5-minute chart. If it looks like your 10-minute chart is setting up, flip to your 5-minute chart. Might get you in a little bit faster. And if you're a real active trader, you flip to your 1-minute chart. Say, all right, my 5-minute chart is setting up, my 10-minute chart is setting up. Let me move to the 1-minute chart. Whoops, my 1-minute chart is telling me it's breaking out of a J-hook pattern. That's going to confirm my 5-minute chart. And that's 5-minute chart is going to probably confirm my 10-minute chart. So again, we're putting all the stars in alignment. The black line is the 8 exponential moving average. We call it the T line. Please draw a line along the trend the Dow was in the past few months. Oh, I'm stuck on the PowerPoints. But if you go back to a longer chart, you can see that there's a trend resistance level right here. And then there's, if you go back, you can see you can draw a parallel trend. I think what we'll do tonight is after Dan gets done, we can flip over to live charts. But the important thing that we want to get illustrated tonight is what Dan has got as far as the type of trading you can do through the Nadex. Can you do 10-minute binary trading? That's what we're going to find out from Dan. He's going to go through that whole system. Okay, so let's slip down here. If we can identify the different patterns, like the J-hook pattern, it's very easy to recognize. It has a very strong uptrend, pulls back indecisively, and then does a J-hook and heads up. And we know that this wave right here is usually the same magnitude as this wave right here. Now, the benefit we have on a pullback is we can see where it's supporting or what it's doing at the T line. Notice wave 1, wave 2. Now we have a morning star signal right here at the T line. That tells us that probably wave 3 is going to be the same magnitude as wave 1. So what that does for us is, whether this is a 1-minute chart, a 10-minute chart, a daily chart, or whatever, it tells us right here, when they start confirming this J-hook pattern, we have a high probability that this wave right here and this wave right here is going to be the same. So now you can make your decisions based upon if you're doing call spreads or what Dan's going to show us, how to use the binary options very effectively. So this is what we want to look for. The J-hook pattern. If we know what the J-hook pattern looks like, we've got 2 opportunities to enter this trade. One, look at our little buy signal. This is what we call a doji sandwich. A bullish candle, a doji, and another candle, bullish candle. This candle right here is usually the same magnitude as the candle before the doji, with the doji sandwiched in between. But we know what the results of a doji sandwich is. More upside. And if it's more upside, we can see what type of pattern it's setting up. A J-hook pattern. Okay. How do you really know that if that J-hook pattern is going to be a continuing uptrend? Couldn't it just as easily be a whipsaw lower? Yes. So what's your trading strategy? If I'm long and I see a sell signal, I'm taking my profits, because where is it likely to move back to? Back to the T line. Is it going to support there? Have no idea. It could continue right on down. But when I start seeing buy signals right here, I know I can come back into that trade knowing what is likely to happen, what type of pattern. So we're not holding on to this. We're taking profits here because look where we are in the overbought condition. We started to move away from the T line. We're starting to see a sell signal, and that's the nice thing about if you're new in here tonight. One of the strongest aspects of candlestick analysis is it's all common sense built into graphics. So if we're in an overbought condition, and we've moved away from the T line, and again, our little simple rule that the further away you move from the T line, the higher the probability it's going to come back and test it. Where do you think is a very safe place to put a stop? Right here at yesterday's open. If it has enough selling strength to come back down through that level, that far away from the T line, where do you think your first target's going to be? Back to the T line. What is a stutter step? I'll have to find one. Stutter step is when it starts up, and it's usually at the beginning of a trend, pulls back a little bit, and then starts back up again, does a little stutter step in here. But that's a whole different different category or different lesson. So Christopher, I hope that answered it. We don't stay in this hoping for a J hook. We're out of the trade and we're back in it when we identify the J hook is happening. A J hook pattern is a wave 1, wave 2, wave 3, whereas a flag is just kind of a sideways move. Could be a wedge. Again, that's a different, once again, that's the big advantage that you have with candlestick analysis is you can easily see what's going on in investor sentiment, especially when it's utilizing other technical things that people are watching, like a wedge or a flag. We can see much more clearly what's happening and really have to be bullish patterns. This is what we call a bearish J hook pattern. We can see when it came back up here to the T line, it rolled over, and we have a very simple rule. If you see a candlestick sell signal and a close below the T line, the probabilities are pretty strong you're in a downtrend until you see a candlestick buy signal and a close back up above the T line. So if we can identify signals and patterns, look how our pattern started here. We can quantify, we have quantified which signals and patterns are the strongest. Here's your strongest one. Remember, a doji says indecision between the bulls and the bears. A doji in the oversold area followed by a gap up is your best friend. That's what we call it, your best friend. The reason we call it your best friend is because the probabilities of an uptrend are extremely high, and not only is the probabilities of your uptrend extremely high, but the magnitude of that uptrend is extremely strong. So when we're buying in an uptrending market, all boats are going to rise in a rising tide. We're looking for the boats that are going to rise a lot faster than the rest of them. I've been making that mistake, trying to hold through a J hook. Yeah, close it out. There's our sell signal. There's our left-right combo. The best friend is probably one of your top, if not the top signal, strongest signal. The left-right is a doji followed by a bearish engulfing or a doji followed by a bullish engulfing. Left-right, indecisive doji followed by the roundhouse right. That told us it was time to sell. And then look what happened over here. Right at the T line, we have a kicker signal, one of your strongest signals. So what's our target at this point? Well, if this is wave 1, wave 3 should take us right up here to the 200-day moving average. I always add in here that this is not rocket science. Candlestick analysis is merely the graphic depiction of what normally happens in human nature. Prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. Candlestick signals are merely the graphic depiction of what's going on in investor sentiment. There's our best friend signal. There's our pullback. Where did it pull back this time? To the 50. What did it do here? Left-right combo. A candlestick reversal signal tells you there's probably a change, strong change of investor sentiment. A candlestick reversal signal followed by a gap up not only tells you that they've changed investor sentiment, but they've changed and they want to get back in with great enthusiasm. Again, wave one tells us that probably they're not going to stop here at the 200-day moving average. And what additional confirmation do we have that it's not stopping here at the 200-day moving average? This is what we call a T-line crunch. Notice they could not close it. They couldn't even trade it below the T-line. And they crunched it right up through that resistance level. And how long do we stay in? Until we see a sell signal too far away from the T-line. Now, here's the most important aspect about the T-line. Candlestick signals are the graphic depiction of what's going on in investor sentiment. The moving averages, like the 200-day moving average and the 50-day simple moving average, everybody has that on their charts. They act like magnets because everybody's waiting to see what happens at those levels. Nobody has the T-line, the 8 exponential on their charts. So when it has been working so effectively, the assumption is this is kind of a natural support and resistance, a natural Fibonacci characteristic support level, because it's acts as a very high probability that if you're above the T-line, you're an uptrend. And as you can see, if nobody has the T-line on their charts, when they pull back, it's pulling back on charts that they don't have the T-line on, and acts as kind of a with us having it on our charts, it acts like a graphic natural human nature support level. So if you take the combination of candlestick analysis, which is the information built into investor sentiment, and you combine it with the T-line, which acts like a natural support and resistance level of human nature, when you combine those two, the combination is extremely strong that you're staying in the right trade at the right time. Now, why is that important? Because I hear so many people say, oh man, should I get out of this? I have a profit. And that was me back when I still had the claim to fame of being the worst investor in the world. That if I was lucky enough to have a profit, what was my first thought process? Boy, I better take profits because I sure would look stupid if I had a profit in this and let it turn into a loss. I better sell it as soon as I have a profit. On the other hand, if I buy something and it goes down, what's my next thought process? If it gets back up to where I bought it, I'm going to close it out. And it keeps going down, keeps going down, keeps going down until the pain is so bad you have to sell it. That's called eating like a bird and pooping like an elephant. It's exactly backwards. And because it's backwards, that's the type of thing that we can see identify what human nature normally does. So there's been many times, I didn't say many times, I learned many years ago that if everybody was talking bad about this stock or this industry, and I all of a sudden saw a buy signal, they were still talking bad about the stock or industry. And I finally learned is it doesn't matter what people are saying. The candlestick charts are telling you exactly what the smart money is doing. So I got through that emotional process of, man, it's hard to buy a stock where everybody's talking bad about it, but somebody's buying it, and it's usually the smart money down there. Whoops, I don't want to dig into damn time. So this is what we're looking at. We're looking for where the high probability breakout levels are, because that's where your big money is going to be made, not only identifying the direction, but putting yourself in situations that you're in the right direction and have the prospect of being in a big magnitude trade. I could either be buying here or be buying here. It just improves my probabilities that I'm in the right direction. So when we start anticipating trade setups, we know right now if we saw something like this where we saw a doji right here, we know the simple rule of doji, which is it's going to usually move in the direction of how they open after a doji. So if this opens positive, what do we got going for us? Probably a doji sandwich. And if it's a doji sandwich, what's that telling us about this resistance level? It's not acting as a resistance anymore. We're probably in a J-hook pattern. So all this boils down to that if we know the direction of the market, where the stochastics are, is there obvious support and resistance levels? Did signals bring you back up to those breakout levels? And is it creating a pattern? When you start adding that all together, you're just putting all the stars in alignment. You're basically improving your timing for whether you're buying stocks, options, and what we're going to see tonight is Dan Cook telling us how to use the binary options as a very low risk, high profit trade setup. The sound keeps musing. I'm going to take my screen off right now. I'll keep talking. You keep asking questions. That'll hopefully give Dan time to set up his get his charts set up.
Yep, I'm gonna. Hey, Steve, can you hear me all right?
Yep.
Oh, okay, great. So everybody's fingers crossed right now, hopefully, because working through some technical difficulties on this. Working our best to share the screen. I'm glad the audio is coming through all right, but now we'll just need video. Otherwise, it's going to be, as a technical analyst, if I can't see it, I can't trade it. So hopefully we're good, and really appreciate that, Stephen. And I'll tell everybody what I'll do. Also, because you know what, life like trading, you never know what's going to happen, right? So be prepared for the worst case scenario, which is something I was going to talk about with binary options tonight, and still may. As I watch my computer wheel scroll and scroll as I try to do the screen sharing. Worst case scenario this evening. What I'll do is I'll record tomorrow morning what I was going to say tonight in conjunction with yours, Steve, and I'll make sure everybody gets a recording of it. I'm hoping it pops up here pretty quick.
Yeah, if you've got it where it's just kind of circling,
yep.
You should have that little screen that says screen sharing application.
Yep.
It won't even do that.
Yep, it's saying screen sharing application loads.
Have you already got the screen sharing downloaded?
Yeah, yeah. I've
That's
just on Novio.
Okay.
This is one of the things.
Yep. You should have a little red X just to the right of your start screen sharing tab, just above the screen. Uh-oh. Did we lose him? All right, let me answer some questions while he's coming back on. The question mark help. Okay, you kick them off. Okay, I don't know why that is. Did we get technical help for him? Yes, there will be a recording of this, Christopher. And if Dan can't get a video up, at least he will verbally explain everything, and then we will add that as a video.
And apologies for that, Steve. I got kicked out for a second. I'm going to try one more time to launch this, and hopefully it's successful. If not, like I said, what I'll do is I will record a video tomorrow. Really looking forward to this. Apologies.
That's all right. You've got the start screen sharing tab. You've hit that, and you've got a little thing spinning. There should be a red X just to the right of that. Click on that so you stop the screen sharing. Now put your cursor over the start screen sharing again. Wait for, there's a little yellow message saying you're ready to start screen sharing. Click on it again. You may have to do that a couple of times before the box comes up that says screen sharing application.
Yep, it was working good. I'm guessing right now what has happened is with our security update here on the corporate firewall, that it is blocking it.
Oh, okay. Do you have
Uh,
something where you can go to your security thing and shut it off for a minute? And then,
no, unfortunately they won't allow me to do that. What I
okay.
will do though, because I know we got a nice summer night, at least hopefully everybody has a nice summer night lined up. Rather than keeping everybody on here waiting for me to get these technical issues sorted out, and apologies for everybody. Uh, I've been looking forward to this for quite some time. What I'm going to do though is I'm going to record. I'm going to record what I was going to present tonight. Might actually work out better. You know, sometimes that's how life is, where things don't go as planned, but it works out better. I might be able to go into a bit more detail tomorrow. I promise to keep it concise. But what I'll do is I'll what I wanted to show tonight, and just to let everybody know, is one, you're all still going to get the free lifetime demo. I'll make sure everybody has a link to that, and I'll send out a link to the video that I'll record tomorrow. Show you exactly how to get everything, how to set up your charts, because I saw Steve mentioned we met in Chicago a few weeks ago, and I've been following and Stephen, you're the candlestick expert, but I've applied your all of the technical indicators as well as looking back, and I've loved candlesticks for a long time. I don't spot them like you can. It's going to take me a lot more work before I can, but I really love the strategy that you presented tonight and that you use. I think it's very powerful. So looking very forward to illustrating it on the Nadex platform tonight. I will answer two quick questions. Somebody said, "Does it work on binaries 10 minutes out?" Steve, tell me if you agree or disagree. But I think candlesticks work on any time frame, and that's really their power. Is that you can look at
Correct.
candlesticks on 5 minutes, you can look at them on a daily chart, you can look at an hourly or even a monthly. And so
Yep.
depending on whatever time frame you want to trade, that's why they're there. And another thing, I believe it was that Chris asked, how do you know if it fails? And you know what? Right, the market tells you. Did it go back? Did it go back to the T line? Where was it? Price action will tell you. The one thing, and I wanted to illustrate it with binary options tonight, is that the one great thing is because but you've been trading a little over 30 years, Stephen. Is that right?
I think 40 years now, but I don't know how because I'm only 27 years old. While you're
I
talking, Dan,
yep.
keep hitting your red X if it keeps spinning, and then put your cursor on the start screen sharing. Let it sit there for a few seconds and click it. It may take 2 or 3 times of doing that before you get the screen sharing application box to pop up. If not, just go ahead and describe to everybody what binary options are. I saw a few questions on that.
Absolutely. A binary, yeah, no, here's a question that came up. Does it work with Forex market? If you're referring to candlesticks, absolutely. I grew up in the Forex market. I've spent, from the early 2000s, the Forex market. Basically, a binary option is a simple contract. It's a $100 contract. It's based on a probability. Basically, it's a question that says, somebody just asked about the Forex market. Will Euro USD be greater than uh, 117.40 at this specific time? Will oil be greater than X at this time? And the thing is, it's just like it's the same analysis. The same analysis works when you're trading binary options, and that's what I want to get across is it's the same market you're used to trading. It's just a different way to express a view in that market. One of the things, been around a long time as well, not quite 40 years, but I've been around more than a couple decades trading, and I've seen, and this is probably one of the things I'm most proud about with Nadex is there's no margin calls. I don't know if anybody on this meeting has ever had a margin call, but with a binary option, you know your fixed risk. You can limit your risk um, to a very precise measure. You can close it out early, right? It's either going to be 0 to 100. Think about it like a probability. Very difficult to explain. That's why I wish I could have my charts up here, but I'll put it in the video. as far as how you'd use it. And Anthony, yeah, if you've had a bad experience with a margin call, I'll tell everyone on this call. I used to work at an FX broker back in the early 2000s, August 2007. There was August 2007 was the first time I'd ever heard of the credit crisis or the impending credit crisis. It was also a time when the carry trade against the yen was a big deal, and one swift market move one night. Nobody did anything wrong. There was nothing announced. However, we margined out 5,000 people in Japan and a little over 12,000 or 15,000 in the U.S. that day. This wasn't somebody trading against a news announcement. This was just something that happened. So when we're looking at trading a lifetime, it can't happen with a fixed risk product, and that's one of the reasons why I love options simplified. I'll go in more into that. Stephen, before I take up too much time, because again, it's hard to explain this without, I'm a technician. I can't do anything without looking at it. I'd love to just have some people type some questions in here that I can answer. I see a few people as far as Christopher, as far as looking at volume of trades, what you want to look at is the volume in the underlying. So if you're trading in a future, the volume on Nadex won't impact the price nearly as much as the actual underlying market. That's what's going to drive the price of a binary option. But I'm going to make a note to touch on that as well tomorrow. And GR, as far as binary options in an IRA account, what I'll do is because I'm going to have everybody's email address, I'll send that. You'll have my email address. I'm going to send it directly from mine, because one of the things I know, we've gotten a lot of people that are very new to Nadex, hadn't heard of us before. By the way, we are an exchange based in Chicago. Where we're unique is we're an exchange designed for the individual trader, not the institution. And so I'll talk a little bit more about that in the video, but really I want to get to the meat of it, because I'm pretty sure nobody wants to sit there and watch. While I love the movie Dr. Zhivago, I don't think anybody wants to sit there through a two-part mini-series while I explain binary options. You want to get to the meat of it. I know your time's valuable, so I'll touch on Nadex briefly in the video tomorrow and make sure everybody has that. Candlesticks, as far as London breakout, I would say absolutely. I don't trade the London breakout a ton. I know quite a few people that do. Candlesticks, to me, and Stephen may comment more on this, you can tell they give a great indication. I shouldn't say you can tell definitively, right? We still need risk management, but they give a great indication on what may happen, right? As Stephen was talking about the doji, what's the next move after that? It gives a great indication.
Yes, and that's exactly the purpose of candlesticks, is that through 400 years, the Japanese rice traders identifying these patterns or these signals tell us what's going to happen afterwards with a high degree of probability. Now, the key word there is probability. Nothing's set in stone, but I've discovered that if you consistently go with what should happen with candlestick signals, the majority of your trades are going to be positive trades or going in the direction you expect them to. Then after that, it just becomes an analysis of how long does that trade last. So it's the old concept of where they always tell you to cut your losses short and let your profits run, but they never tell you how to cut your losses short and let your profits run. Candlestick signals do that very effectively. Go ahead, Dave, or
Yeah.
Dan.
Absolutely. Trading, right? We don't know how do you manage your risk? That's a topic that's near and dear to my heart, only because I've seen too many people get destroyed over the years by not doing that. It's one of the things again with like the binary option. That's what I love. It doesn't matter if World War III breaks out. Whatever you put up, that's the most you can lose. And there's ways to use our other contracts called spreads, which when I do the video tomorrow, I'll touch briefly on those. But it's about being in position. And Steve, I know you say you're a swing trader, and one of the things I've found in the history, and this is more of just a trading tidbit, is that, and I end up being typically more of a swing trader, but all of my swing trades, the market determines if they're going to be swing, because if I'm wrong, I got to get the hell out, basically. If it starts
Correct.
going against me too far, rather than saying, oh no, this is a swing trade, so I'm going to let it go against me for 3 days. No, that's not what a swing trader does. The market determines if it's going to be a swing trade or if you're just wrong.
Right.
Let's see. Yeah, I'm going to answer a few questions here real quick. As far as Marshall, yeah, binary options, and this is one of the misconceptions of them. People consider them all or nothing, which at expiration they are. And I've been talking for about a decade now, trying to get the majority of people to realize that I think it's very important to understand you can close out early. I'll give you an example that traders make. 2 examples real quick. So right, a binary is priced 0 to 100. So let's say I buy one at $30 and the market moves up in my favor. And now all of a sudden, that binary option, I can sell it for 96, right? My maximum return is 100. So if it's sitting at 96, and they'll sit there and they'll sit on it, and basically what they're doing is risking $4, or they're risking 66 to make $4, right? So if it gets up there, there's nothing wrong with closing it out. Another one is buying it at 10, right? They're basically taking kind of a long shot. If you buy it at 10, which there's nothing wrong with, the probability of that going to 100 is probably more like 8% rather than 10%. If you're thinking of it in probability terms when you count the bid-offer spread. But if it goes from 10 to 30 or 35 or 40, say you trade 10 contracts at $10, set limit orders, right? Because so often, and the rule of thumb with binary options is if they're trading right around that strike price with some time left to expiration, they should trade right around the midpoint of 50. So yeah, you can close them out, and that's a really important point because there's a lot of great strategies that can be utilized, particularly around fundamental announcements, which we're talking more technicals here, as far as closing them out early. Let's see. Yeah, Jeff. Yeah, actually, if a binary option, so if you buy a binary, let's say it's 70 and it starts to go against you, and say it hits 55, yeah, take your lumps just like any other trade, but you can get out. You don't have to wait for it to go to 0. Kim, I think as far as how difficult it is to learn to trade binary options, my experience and a lot of people I've worked with over the years, there's some nuances to binary options, but the most difficult part to learn to trade is actually learning to trade itself. How do you analyze the market? What's your plan? How do you manage your risk? These are the tough things. Once you get all those down, a binary option is just a different vehicle. It's just like I would call it a simplified option trade, a call or a put. Very, very easy to learn and very quick to learn. And thank you, John. You say you only trade Nadex. That makes me happy. But yeah, I'm a big fan of other markets. I'm personally not allowed, in full disclosure, I'm not allowed to trade Nadex since I work for Nadex, right? You can't have an unbiased exchange where I might be biased towards the outcome. As far as safest way of trading options, you know what? As far as safest, they're safe in the respect that you can never get a margin call. And so unlike if somebody sells, oh, hold on one second. Yeah, go ahead and start the back. I'm still in the office, so they're just about to start vacuuming. So probably tells me it's about time to wrap up here. But um, I'm a big fan of binaries, and I have been for a long time, even long before I was at Nadex. As far as safe, here's the thing with safe in the market. Binary options, you can only lose what you put up, right? If I put up $70, 700, 7,000, doesn't matter. That's the most I can lose. So yeah, in that respect, I know what my risk is. Now, if I only have $7,000 and I put $7,000 on one trade and I lose that, to me, that's not safe. So always use good risk management principles. I don't care what you're trading. As far as Nadex sending a 1099, yeah, we sent a 1099 at year's end. As far as the actual tax implications, you'll have to talk to your accountant. I'm not allowed to give tax advice. By the way, these are great questions. I appreciate it, everybody. As far as simpler to trade than traditional options, I mean, buying a call is pretty easy. So there's some nuances. Now, one thing when I got into traditional options, which I absolutely love, I started to learn, I was like, oh, hey, here's a call. Here's a put. Easy enough. Oh, wait, what's delta, theta, gamma, rho? I thought I was joining a fraternity. And then somebody's like throwing out, oh, it's an iron condor. It's all this. Um, I think, in my personal experience and people I've worked with, I do think binary options are a bit easier to learn than traditional options, particularly when you start getting into really deep into the Greeks. Now, again, I still love traditional options. Well, actually, Chris, trailing stops are great until until the market really slams against you and the trailing stops gets blown by 3 points or 30 points. So that's where uh, binary options and options, if you're buying an option in binaries, whether you're buying or selling, it's always fixed risk. In traditional options, if you're buying or selling a call or put, or excuse me, buying a call or put, it's always fixed risk as well. Actually, Jeff, as far as a 50-50 proposition, no, it depends on where you buy it. There's a huge strike chain, so you'll have different probabilities. You can buy a binary at 10. If you buy it at 10, your maximum potential is 90. If you sell it at 90, your risk is 10, maximum potential is 90. Sell it at 80, 100 is your worst case scenario, so you'd be risking 20 to make 80. All about analysis, and there's different strategies, but that's a great question. I'll touch on that tomorrow. Let's see. Wow. Um, our website. You know what? I'm gonna tell you what, everybody, too. I think that should go out to everybody. www.nadex.com. Um, yeah, like John said, I buy at 40 and sell at 80. As far as the spreads, Vic, they've gotten a lot better as far as binary options. About 8 years ago, you'd see 10 or 12 wide. Now, depending on the liquidity of the market, I mean, you're typically seeing $3 to $4 wide. Cody, as far as thoughts on whether today's candlestick analysis is much different between binary options versus other trading, not at all. You just have different vehicles. There's no difference. The analysis is exactly the same, and that's the important thing for everybody to understand. You're analyzing the underlying market to determine what that vehicle will do. For example, if you're trading traditional options, right, versus a stock, if you're buying the stock outright, well, you're doing your analysis. Do you think it's going to go up, or do you think it's going to go down, and to what degree? Um, Same thing with a binary. All you're doing is estimating, will it go up or will it go down, and to what degree? If you're buying a call because you believe a stock is going to go up, it's a little bit different than buying the stock outright, but the analysis is the same. You just have to understand the nuance when you have time value and volatility. KM, binaries have daily expirations, they have intraday expirations, they have weekly expirations. Yeah, Nadex is available for LLCs and corporate accounts, not available in Canada, though. Thank you very much for Caleb. GR binary just means yes or no, on or off, true or false. At expiration, there's only one. Jeff Sutterfield, I am not related to Jeff Cook at Nadex. However, I do know him very well. He is a great guy, and as far as mentorship program, we try to do a lot of education, but what we like to do, and just let everybody know I am working on the education center, but really what I love to do is, because everybody trades a bit different, and that's why I'm so happy that Stephen could do his presentation tonight, that we could work together on this, because I find his analysis, one, rock solid. Like any analysis, and Stephen will be the first to admit, I'm sure, no guarantees it'll ever do exactly what we think it's going to do. But if you have something that you can do consistently over and over and over again, right, you can figure out what the probabilities are. What's your risk? And combining those two things are very powerful in trading. And And yeah, you know what? I'm going to put a lot of this in the. I know Steven's going to flip to live charts soon. I'm going to put a lot of this. Actually, I might even try to record the video tonight. But if not, tomorrow morning, first thing.
Dan, what we might also do is schedule you again and maybe do like a Wednesday night where we just do you specifically. So I'll talk with Pat and see if we can reschedule.
Yeah, that sounds good. And my apologies to everybody. By the way, this is a great group. I love the questions. One, I love talking trading. It's been my passion forever. But yeah, Stephen, if we could schedule again, that would be great. And I'm going to put together the video, and like I say, I'll make sure everybody gets that, as well as my email address, as well as some additional resources, Stephen. So it's been a great group. My apologies again, yeah, but that's how life works out. You know, you get all excited
No,
about something, and sometimes technology-wise, it just doesn't work out.
yeah, we've had this happen a couple of times with Omnovia, so it's nothing that you can predict. So we will get you scheduled again because I know there's been a lot of people asking me today about how to use the binary options effectively or how they're used. So we'll do it again.
That sounds great. I appreciate it, and like I said, I've been looking after seeing your presentation a few weeks ago, and I've seen a few that you've done. Really appreciate that, and I'll tell everybody it's it's a very solid type of analysis. I'm really enjoying it.
All right, well, good. All right, Dan, thank you. I'm sorry for the technical problems tonight.
All on my side, Stephen. But yep. Oh, by the way, along with the video tomorrow, I'll send everybody my email. It'll come directly from me, so you'll all have my contact information.
All right, good.
All right. Thank you again, Stephen.
Thank you, Dan. We will do it again. And everybody, we will try to bring up some live charts so we can go through some quick analysis. But the reason we had Dan on tonight is this is a very effective way to utilize candlestick signals where you don't have all the other elements of option trading, such as your premiums, and knowing that it has to get to a certain level to make money. You're basically making money as soon as it starts moving in your direction. So it's got binary options have a huge advantage over just merely option trading. Oh, and I hate to have to do this. I'm going to have to log off real quick. I'll be right back because I'm having the same problems Dan is getting the projector up. Hold on, I'll be right back. Okay. All right. Yeah, sorry for the technical difficulties tonight. Dan has used Omnovia before, so it's the old assumption that everything is going to work perfectly. And I guess it's Murphy's Law that if anything can go wrong, it will. All right, this is the cues. So again, my interest in binary options is if I can tell which way something is going, and I can pick out a target and do a binary option. Target. I know that if it heads in that direction, I don't have to get back to where a break even to Jim, the recording guy, is at his investor meeting tonight over in New Jersey. But if I can start making money as soon as it's moving in my direction, that's what I'm looking for. I don't have to worry about getting back to my cost break even or cost and the premium. If I can identify something moving in a direction, I can make money with it immediately. So we saw the Qs trade at higher, I guess it's all-time high, as well as the Dow coming back up. And for somebody asked earlier, how can you show the trend channel? Well, shucks butts. You can see the trend here. Oh. So where's your next likely target? Up here. Now, is it going to go straight up there? Probably not. It's probably going to waffle until it gets to that level. Then you have to see what happens at that level. Yeah. Because the money you're putting up in Nadex is you're not worrying about margin, and you're not worrying about or you don't have to worry about your account going negative. You're just basically putting the money in, and then you can't lose any more than you put in. I don't know what the Nadex. What time frame is that chart? This one right now, Christopher. I've moved this out to where you're looking at June, May, April. So you can make the time frame. The time frame doesn't really matter unless you're analyzing what the overall chart pattern looks like. What I'm really looking at as far as a swing trader is what's happening right now. And if I can identify there's a possibility of it going up here, that tells me that's kind of the time frame. But the length of time that you put on your chart is really insignificant in the sense I just want to be able to see what's happening right here clearly. And then I can go back and as far back to see what else is happening. But we've got chart patterns that are working very effectively. We can see that happening in Amazon, Apple. All of this congestion right here, started seeing buy signals. And what's the element that we can see in Apple? It's in an uptrend, and they haven't been able to close it below the T line. So this is making some of our positions that we've recommended, Chem, for example, is a J-hook pattern. And notice what started the J-hook pattern, a doji, a hammer. There's your doji sandwich. There's your breakout. So where do we anticipate this price movement to go? Well, if this is wave one, we're expecting it to move up here somewhere. Roku, same scenario. There's our trend channel. So if I'm looking for a target, I think this is a pretty safe target. And look at the trend channel. Pretty much a parallel channel heading up. And what's the element that keeps adding credibility to the uptrend is in progress? They haven't been able to close this below the T line. Now, for some of the new folks here tonight, knowing what each candlestick signal represents tells us the nature of buying and selling. Notice when they pulled this back, it was indecisive, indecisive, indecisive. You're in an uptrend and the pullback is indecisive. What's that kind of imply as far as your uptrend? That the force, strong force, is still in the uptrend. Any pullback is just indecisive pullback. So we can calculate the magnitude of return based upon the chart patterns that are setting up. We bought into INNT a while back, had very good price movement. Notice what happened down here. Candlestick buy signal and a close above the T line and a breakout. Told us we had a good strong price move. So a huge advantage we have with candlestick analysis is not only identifying when a reversal occurs, but putting ourselves in positions where we have big price moves. So let's say you didn't get this price move. Well, if you can identify that a J-hook pattern is setting up, what do we expect from wave 3? Wave 3 we expect to be the same magnitude as wave 1. Now, why is that significant? Because if the force in wave one was extreme and there's profit taking and the profit taking's over, more than likely the strength of that force in wave one is now going to continue into wave three. That's not anything set in stone, but that's just kind of a normal human nature. That's why this J-hook pattern sets up. Would using intraday charts be more effective than trading binary options? T-Ruse, it's yeah, your I guess Apple and horse before the cart before the horse. Yeah, you can use intraday charts to trade whatever you want to. Binary options is just one method of taking advantage of knowing which direction a price move is occurring. And that kind of also makes it more beneficial that if you can establish the fact that Amazon was going to trade positive today based upon the gap up, you may have done a binary option that it traded above this level and you bought it right here and you paid 30 cents for it when it went through that level at whatever time frame. Let's say you were trading a 1 hour time frame, went through that level, that means your 30 cents went to $1. At least you knew you could be looking in that direction as far as the overall direction. If you used a 10-minute chart, look at the same patterns that occur on the 10-minute chart. There's your J-hook pattern. If you wanted to trade even faster, do a shorter time frame. There's your 5-minute chart. So you use, remember, candlestick analysis is a price movement based upon human nature. It doesn't matter whether you are trading stocks, bonds, currencies, futures, tulip bulbs. Anything that has fear and greed in it is going to work effectively with candlestick charts. Boy, I didn't do any, let's see, analysis of what looked good for tomorrow, but we recommended MYGN today, and it didn't really, convert or execute, but there's our best friend. Where's our likely target? Top of this trend channel, or a 45 degree is what we expect after a big price move. And I forgot the example to show for that one. We're also can identify where a breakout should occur. We've been watching here, and we know where the breakout level is. Right about here. So if it starts trading up and closing above this level, what can we assume? Wave one, wave two, going into wave three. How would candlesticks work for politics? Warren, I think the only way you could use it for politics is to measure the stupidity factor, and that way you would have a bullish chart constantly showing how stupid American politics are. All right. Okay, let me get to a chart that has all of them. Here's GLMD. Notice what you had, a pullback. Now you have a doji that gapped up through the T-line. Kind of a, not a kicker signal, but a gap up. So what's our simple rule of a doji? If it opens positive, the probabilities are it's going to trade positive. It's going to move in the direction how they open after a doji. So what's our analysis? They consolidated all the way back to the T-line, which, if you remember, Nobody has the T-line on their chart. We can use it as that special gauge or that special indicator telling us exactly where human nature moves back to. So on this chart, you've got the red and the blue. Those are the 50-day simple moving averages. The gray line is the 34 EMA. That works extremely well, especially over in the futures trading area. The black line is the T-line. That is the effective trading one if you're a swing trader or a short-term trader, whether you're trading off a 1-minute chart or a weekly chart. The T-line works very effectively, telling you what the trend is. And then the 3T line is this green line, and that just works that the further away you move from the T-line, the higher the probability it's going to come back and test it. So if we know that as a simple rule, we know that if we see something where you've moved way too far away from the T-line, then you flip to your 10-minute chart. And as soon as it comes, see a sell signal and a close below the 10-minute T-line, you take profits, because what's that telling you? More than likely they're selling it, and where are they eventually going to sell it on the daily chart? Back to the T-line. Everything that you will learn in candlestick analysis is that it's all common sense put into a graphic depiction. We do trainings constantly on candlestick pattern signals and the philosophy. We also have another training coming up this Saturday, not this Saturday, next Saturday, which helps you use candlesticks to get the emotions out of your trading, which is the big bugaboo for most investors. And that's why candlesticks was so effective when I started using it. Again, being the worst investor in the world, I realized that I was doing everything backwards. And it wasn't that I was doing everything backwards. I was doing what everybody else usually does, which is why the candlestick charts work effectively. The green line is the 3T line, 3 exponential moving average. 3 EMA. Okay, what else do we got? Somebody wanted to see. So we're long right now on INNT for 2 reasons. One, because we can see the J-hook pattern setting up. Even though it's a relatively thinly traded stock, it only trades like 140,000 shares a day. But we can see the pattern setting up. Now, sometimes a pattern isn't going to be relevant if this move here is a 3% move and this is a 3% move. In this case, we can see that it moved from 10 to 27, 17 points. If it moves 17 points from here, that takes us up into the $40 range. So we're essentially trying to find the situations where it might be volatile, but the signals and patterns work effectively no matter whether you're trading an involatile stock or a volatile stock. STM. I just happened to write down a few today. There's another J-hook pattern setting up in VSTM. Notice what happened down here. A kind of a cradle pattern. If one doji means indecision, a series of doji means greater indecision. And when they told you what their decision was, that told us we had a high probability they were going in that direction. Now, I say high probability. We also went after FedEx over the last few days because look at the cradle pattern that's set up in FedEx. But what's the simple rules of candlesticks? If this is the candle that told us the bulls had taken control coming out of this indecisive stage, and the reason we call this a cradle pattern is because there's the headboard, there's the bed, and there's the footboard hanging down between the trends, it should be moving in this direction. If this is a successful trade, it's going to move here. So the Japanese rice traders have a very simple philosophy. You're stuck on the here chart. RG, hit your refresh button if you can find a refresh button. It might be your red X, and then come back in again real quick. So there's a very simple philosophy. There's our doji. What's our simple rule of doji? It's going to move in the direction how they open after a doji. Well, yesterday, they gapped it down and traded it where? Back below the T line and the halfway point of the candle that told us the bulls were in control. If the bears can close it back below the halfway point of the candle that told us the bulls were in control, who's in control? The bears are still in control. So we closed out the position. This is the case where the high probabilities or high percentage of trades are going to work. But one of the elements of successful investing is when you see a trade that's not working, you need to close it out and move on to something else. Most people, like me in the old days, said, oh man, this looked like it was going to work. I'll give it some more time and see if it's going to work. Well, there's too many other, with simple scanning techniques, there's a dozen, 2 dozen, 3 dozen other charts right now that look very, very good. Why put your money in something where you're hoping that it's going to work out when you can go to something that tells you that it is going to be moving in the right direction? Cork was another recommendation. If you bought it on positive trading, you can see the fry pan bottom. What are we expecting? We're expecting to break out here. Didn't really move today. So what do we expect? Well, we've got a doji. What's our simple rule of the doji? It's going to move in the direction how they open it. So if it opens positive, we're looking for a breakout. If it opens lower, where's our common sense stop? It shouldn't trade back below this level. If it does, it tells us the bears are back in control, close out the position. If they start trading back in this direction, what's it tell us about this level right here? It's acting like a double top. Is there any significant in crossovers and various trend lines? No. The number one element that we're using to make our decisions is what's going on in investor sentiment as far as the signals and the patterns, because that's the most telling, convincing argument of what's going on with investors. Everything else is just a confirming indicator. If they're crossing moving averages, if they're bouncing up off of moving averages, if they're pulled back to a Fibonacci retracement number, because we can see exactly what's happening in investor sentiment right now, and it's telling us what people are doing right now, it tells us exactly what's happening at different levels. If you see a moving average crossover, you don't use that for your, I mean, you already should have used the candlestick signal as your initial decision they made after that indecisive trading. Could you go over the scan parameters in a future session? Yes, Jerry. That's all built into the scan parameters. Are looking for the best possible trade setups. And I'm trying to think of which ones we just look at. Some. Now the gap up is one. Again, there is about 14. Everybody asks, well, which are the strongest signals? Well, we've already narrowed down out of the 50 or 60 signals, the 12 major signals. The reason we call them the 12 major signals is not only do they work effectively, but they occur probably 99.9% of the time. So just by scanning, so here's Papa John's. This is the kicker signal. This is one of the 12 major signals. Kicker signal opens here and closes here. Today, they gapped it up above the previous day's open and went this direction. That tells you the investor sentiment has probably been kicked in this direction. You've got a high probability that you're going to be in an uptrend and a high probability that's going to be domestic earnings weren't quite as good as what everybody was hoping for, or that was the news that everybody had been buying that stock, and when the news came off because the trade wars are going to be bad for the U.S. economy, and all the talking heads said, yeah, it's going to be bad. Well, what's the answer today? I mean, everybody else knew. Okay, I guess so we've kept everybody past their bedtime. So I'm sorry we didn't have a better presentation for Dan, but we'll have Dan back on because binary options are good for people that may want to trade a little bit of money but don't want to have to worry about analyzing where a price could go. That if we look at a 5-minute chart, see if we can find something that we can tell which way it's going on the 5-minute chart. All right, everybody, have a good evening. Sounds like a marriage. Well, it kind of reminds me where last night I whispered in Sandy's ear, tonight I'm going to make you the happiest woman in the world. And she said, gee, I'm sure going to miss you. So with that, everybody, have a good evening. We will see you bright and early in the morning. We'll see you then.